Did you know that salaried individuals in India pay up to 33% of their income in taxes? But what if I told you there is a way to legally reduce your tax burden on a salary of rupees 15 lakhs? Today, I'm going to reveal how you can avoid paying taxes by leveraging smart tax strategies that are fully within the law. Statistics show that an average salaried professional, a salaried person in India, could be losing 30% of their income to taxes. That's a significant proportion of their earnings. But here's the good news. With the right planning, you can actually legally avoid paying taxes on a salary of rupees 15 lakhs in India. In this video, I'm going to share exactly how you can do that and keep more of your hard-earned money with you. My research says that over the years, it has shown that a well-structured salary can significantly reduce your tax burden. In fact, if you're earning rupees 12 lakhs, 13, 15 lakhs salary, there are several strategies available that can bring your tax liability to almost zero. Today, I will take you through this research methods which I've learned so that you can maximize your income while paying taxes as little as possible, as legally as possible. Interested? Watch till the end, don't miss, and do make notes. And I'll give you gifts at the end. There are some downloads also. Welcome back to my channel, Taresh Bhatia. For those of you who are new here, I'm Taresh Bhatia, a certified financial planner CFP and your go-to financial freedom specialist. I'm the author of the best-selling Amazon book, The Richness Principles, where I share actionable steps for achieving financial success and independence. Check in the description below. As a coach at the Richness Academy, I help working professionals, entrepreneurs, and families build wealth, reducing their financial stress and create a rich, fulfilling life forever. Over my last 38 years of experience in financial planning, I've guided countless individuals and families for their wealth creation, achieving financial freedom over a period of time. My mission is to break down the complex financial concepts so easy into actionable strategies that anyone can apply. So whether you are just starting off or trying to fine-tune your financial game plan, I'm here to help you on every step. Today, we'll be focusing on powerful topic for those earning a salary of rupees 15 lakhs a year and how to avoid paying taxes legally by making the most of the exemptions, deductions available to you. So if you are ever felt confused by the tax system, this video is going to help you to provide with clear, actionable insight. Let's get started. Today, we are diving into something that's crucial for everyone. Earning a salary of around 15 lakh rupees a year. How to avoid taxes by legally leveraging those tax exemptions and deductions available. So if you have ever felt overwhelmed by tax jargons, exemptions, deductions, don't worry. I'm here to break it down for you step by step. If you're new here, don't forget to like this video, subscribe to my YouTube channel, Taresh Bhatia, and share it with others who could benefit from these tips. Rupees 15 lakhs as a salary is what we're going to target and learn with this example. And by carefully structuring your salary and taking advantage of the right exemptions and deductions, you can be actually reducing the outgo at the end of the financial year. In fact, the old tax regime makes it feasible to bring down your tax liability down to zero. But how do you do that actually? Let's walk through the steps. And I'll take you all through the steps one by one, and I'll give you a downloadable calculator. But before we do a deep dive, I've created a comprehensive tax calculator that you can easily use, understand to your particular tax situation in a better way. The link to download this is given below in the description. On screen, I will show you one by one how and what are the steps. And this calculator allows you to input your tax salary details one by one and other financial information. It will help you see exactly where you stand with both the old tax regime, the new tax regime as of today in August 2024 before making any financial decisions. Next, let's compare the old and new tax regimes. This is a critical step before you make any choice on old and new. By default, you go to new tax regime when you're filing your return. But the tax regime decision can dramatically impact your tax liability. So old tax, new tax, let's understand. The old tax regime offers a variety of exemptions and deductions like Section 80C, HRA, and much more, which can be very beneficial if you know how to use them carefully. On the other hand, the new tax regime offers more tax slabs with lower rates but without any deductions or exemptions. In some cases, many cases, if your salary is structured well, the old regime might end up being the better option. Subscribe to my channel YouTube, Taresh Bhatia, for getting always content which you can use like this and for such financial smart tips. Let's continue. Now that you've understood there is difference between the old and the new tax regime. So the two tax regimes is what you have to understand carefully to explore all possible tax opportunities to help you out. Now I'm going to show you how in tax saving instruments like EPF, PPF, ELSS and more can help you to maximize your savings, and you can take advantage of various sections of the Indian Income Tax Act. For example, Section 80C allows you to claim deductions up to rupees 1.5 lakhs in EPF, PPF, ELSS and other instruments. Additionally, don't forget Section 80D for health insurance premiums, Section 24 if you have taken home loan, and the interest component for this. Now these can help you to lower your taxable income significantly. I'll go one by one and I'll show you on screen how you can take benefit of all this. So take notes and do download the tax calculator given in the link in the description below. Let's continue. As a reference, I'm just showing you here the difference between the old tax regime and the new tax regime, and the difference is only to explain with this illustration that up to what level the old tax regime and the new tax regime can benefit. So up to 3,75,000 if you are investing under various sections, and I'll explain shortly, and up to 15 lakh rupees and thereafter it may not make a difference whether you save 3,75,000 or you do not and you go for the new tax regime. I'll make it much more easier. This illustration is just to explain. Furthermore, here I'm trying to explain various strategies to understand how you can reduce tax. Let's understand these 4 points here. So under EPF, under the exemptions under Section 10, under the standard deductions available and the deductions available. So we are going to understand 4 components when you're trying to save taxes legally. The first one is EPF. So your employer's contribution, which is within your CTC. Now that component, 12% up to 12% of your basic salary, and check the latest regulations on this. Also would like to add that employees contribute 12% of their salary, their basic pay, which includes DA and your basic salary plus DA, to the EPF. So just to clarify on this, and this component is tax exempt. So this is EPF part 1. So the next is your exemptions under Section 10. These components, HRA, which you have to check if you're paying taxes eligible, children's education, if you have children and their education fees is going, children's hostel fees, LTA, reimbursements, all the reimbursement which are there, and mobile bills. So all or whichever is you are eligible in your salary CTC, check out this. And these are exemptions under Section 10 of the Income Tax Act. The next is the standard deductions. So you have to check whatever is the amount available today for standard deductions. And the last comes various sections of the deductions available under various sections. I'll go quickly on this because I'm very sure you are aware of this over the years what are applicable. So Section 24, the first one, which includes your home loan up to 2 lakh rupees. The Section 80C, which has got many sections, further on. So your investments up to rupees 1.5 lakhs, which includes these various or options here. Understand carefully, make notes. EPF, PPF, home loan principal amount. There it was the interest amount on home loan. So that was a separate section. Now ELSS, equity linked savings scheme, if you contribute again, mutual funds, ELSS up to rupees 1.5 lakhs. ULIP, if you've taken ULIP policies, understanding them. Life insurance premiums, annual premium total paid from 1st April till 31st March, whatever is the total amount of life insurance premium you have paid or are going to pay. NSE, if you have taken post office fixed deposits, if you have done 5-year fixed deposits. SSY, if you have taken tuition fees for your children, and NPS under section 80CCD 1A. Now this is a separate section here under NPS section 80CCD 1A. Now I'll go to the next section. After this is section 80CCD 1B, which is NPS up to 50,000 rupees annually if you are paying or contributing. So under NPS section 80CCD 1B up to 50,000 rupees. Then it is section 80CCD 2 where you pay in NPS up to rupees 7.5 lakhs per annum. Employer's contribution is what is being discussed here, and up to 10% of your basic plus DA or 14% as applicable. Government employees, private sector employees, you have to cross-check that section here. So this is 80CCD 2. Earlier I have explained 80CC 1B. Now it's section 80D for all your health insurance premiums up to 25,000 per annum for self or family dependents, your spouse and your children, up to 50,000 rupees per annum for including the parents if you are paying their premium, and this 25,000 includes self, spouse or dependent children. So this is 80D. Next is 80E, which is your education. So higher education for self, spouse or children, and there is no limit here under 80E. That is 80E if you are taking education loan. Next is if you have taken a EV vehicle. This is very new and interesting. So only up to 2029, 2030. So this is a specific year which you have to be very sure and accordingly take the benefit for. So this is section 80EEB where you are eligible for tax deduction of rupees 1.5 lakhs on the interest you pay on the loan amount for the EV vehicle. But check up the latest income tax clarifications of this and up to which year. The next is 3 tips from my side. Number 1, if you are eligible and you can and situations permit, pay rent to your parents and get the rent receipt to give to your company if you are salaried and you are with a private sector company. Tip number 2, both the spouse can claim home loan benefit. So if you're taking a home loan, perhaps consider taking in a joint name, husband, wife, both can take this home loan benefit. And my tip number 3, if you have liked till now, tell me how you're liking, give in the comments below. So pay the insurance premiums for your parents because you get additional benefit of another 50,000 rupees, reducing your tax liability by 50,000. Approximately you can divide that by 3. That is a benefit about 17,000 rupees, 16,000 rupees you get benefit. And even the top-ups which you pay for yourself or for your parents, the premium you pay from your eligible bank account, you are eligible to get the tax benefit there also. So I have covered all these 6 points, and if you have liked them, tell me you have liked, put in the comments below, in the description below that, how you have liked it with your comments, and if you like me to explain any point further. So now it is another point on additional slabs which you can experience in the new tax regime. So in the new tax regime, The new standard deduction is up to 75,000 rupees, and the tax regime, the new tax regime also has new clarifications, new changes, and this has been introduced to the tax slabs and increased the standard deduction, the 75,000. Change is there, and these are many changes recently in the latest budget, and I'm trying to bring the salient features here. So the standard deduction is increased from 50,000 to 75,000. Basic exemption limit has been increased, elevated from 2.5 lakh to 3 lakhs. The action there is that you have to ensure that the increased standard deduction is factored into your tax planning. The benefit is that this provides additional relief to salaried employees, reducing taxable income and increasing the net tax home salary, in my opinion. The realignment of this tax slab offers potential tax savings for many salaried employees, particularly those with lower to middle incomes. Review and opt for the most beneficial tax regime as per your eligibility and calculations. Action to be taken: compare the old and new tax regime here so that you can determine very clearly which one to take up. You have to ensure that better financial planning, optimizing tax savings on one side, and enhanced retirement benefits to combine into one. For example, taking ELSS, taking NPS, planning for your retirement, as well as having optimized tax planning also. So the taxpayer need not maintain a track record of travel tickets and rent receipts going forward, and the income tax rule changes from 1st April 2024. Make sure that taxpayer can get rid of complex tax planning, and all these changes aim to simplify the tax planning. How do you like it? Put in the comments below and let me know how do you like all these ideas, which I've tried to summarize as elaborately possible. Now the new tax regime has further explained and reduced the rebate limit. There are a lot of changes there. So I'm explaining one by one 5 points. So the introduction of the new tax regime has increased the tax rebate limit. As per the old regime, the applicable tax rebate limit is 12,500 for incomes up to 5 lakhs. However, under the new tax regime, this rebate has been increased to 25,000 if the taxable income is less than or equal to 7 lakhs. Section 87A rebate is applicable under both income tax regimes. Budget increased the taxable limit, the budget of 24-25 presented in July 24. This budget increased the taxable limit to rupees 7 lakhs from earlier 5 lakhs under the new tax regime. So that's a big change. If you're looking to consider the new tax regime, then these new changes can help you to plan further. Therefore, the tax payers earning up to 3 lakh rupees obviously pay nil tax, and those changes specifically are set to provide individual taxpayer with an annual tax saving of about 7,500 here. So that's a point to be noted. Next, so is the new tax regime only for some people? Let's understand that. I've made it into various points here. So there is an increase in the NPS contribution. This is the latest. Make a note. An employee will be allowed a deduction of 14%. Yes, it's 14% of the salary for the employer's contribution to their NPS account. Earlier it was less. Earlier it was available only to government employees. So this has been extended to private sector employees in the latest budget. Therefore, this change, employees' contribution to NPS, has been increased from 10% to 14% of the employee's salary. And 3 points here. This change, the deduction of expenditure by employees towards the NPS, therefore gets increased from 10% to 14% of the employee's salary. Implication is this change, this encourages more significant employer contributions to NPS, resulting in a higher accumulation of retirement funds for employees. This maximizes the NPS contributions for an employee. A good step if you're looking at NPS to be adopted as a tax saving, more of a retirement tool. I'm not here advocating use or not, but my sense is that the implication is this change enhances the retirement savings for employees, making NPS a more attractive retirement planning option and a good tool. Therefore, this increased contribution from the employer, it boosts the overall corpus towards additional cost to the employee, leading to a higher retirement benefit. So benefit, enhanced retirement savings and additional tax savings under Section 80 CCD 1B. Make a note of this carefully. This is to look for more of ease of administration, and let's look forward to that and make new tax regime more lucrative with this particular move. You have to take a guess and take a decision on this part. So to explain this very clearly, I'm giving you this Excel on screen and you can download this Excel. I'll give you a template for this calculation yourself. But for understanding purpose, I'm trying to explain to you very clearly something. Understand this here and look at my cursors. So we're taking the example here of 16 lakhs as a salary. Standard deduction under the old tax regime is 50,000. And just for the calculation purposes, HRA exemption, other exemptions, then LTA exemption, NPS, EPF, all of 8 lakh, 9 lakh 63 it is coming to. Now, I'm just omitting whatever I don't think is happening or is there, any other additional income for the understanding purpose, example, illustration. Now, all the deductions happening are ATC 1,50,000, ATCCD 1B 50,000, Section 24, Section 80D, Health Insurance 25 section, and so all these if put together, and I'm not taking these, that 80G and others, your total taxable income falls below 5 lakhs. 4 lakh 88 is your taxable income, and hence the capital, the total tax is coming to 4 lakh 88. Now various tax slabs will be made here, and the taxable income, total tax 11,900, and total tax payable after all the rebate under Section 87A and the surcharges if any, health and education cess if any, the total tax is 0. And this when compared with the new tax regime, where the tax per month without doing any deductions is about 14,300 per month. That's the major difference. So I wanted to show you zero tax for a salary of 16 lakhs under the old tax regime. This is just an illustration purpose. You have to check the latest income tax regulations and instructions for the same. So let's continue on the points which I'm explaining there. So with that illustration which I've shown you the Excel just now, the example of 16 lakh CTC and the example with that where the basic salary is taken as 8 lakhs, and in this example I've taken the old regime is better than up to a salary of 15 lakh rupees, and example actually may vary depending on the benefits available and what you are eligible for, but the choice is yours between you want the old tax regime or the new tax regime, whether you want to save taxes or you have maximum take home salary as such. So this calculator shows at the moment up to this salary slab, old tax regime is better, and these calculations may vary obviously for as per the company benefits you are getting or your CTC structure, and you have to check with your CA and decide which is better, showing this Excel, inputting yourself and discussing with your CA or a professional person who understands. And just to recap again, Section 80C, where you contribute all your savings investments, particularly in PPF, EPF, ELSS and NPS to avail of rupees 1.5 lakhs deduction, and these insurance premiums for life insurance also falls under 80C. 80D, the health insurance deduction up to 25,000 rupees for health insurance premium paid for yourself, spouse and children. 80D, Also has additional benefit of 50,000 rupees which you pay premium for your parents, and you are eligible for that benefit. Home loan under section 24, and you're restructuring your salary for the tax efficiency. You can discuss with your company's discussions with your HR whether they can help you to reduce, explaining them these benefits, and whether HRA, LTA and these reimbursements are part of your salary and they can help you to reduce taxes. So finally, what action to be taken? You have to compare, understand old tax regime with the new tax regime, given the facts which I've explained, given the sections where you can reduce, and then understand whether old tax regime is beneficial or you don't want to go for that and you want to go for the default new tax regime. Summing up now, if you've understood it better, then download this free Excel calculator I've given in the description below, income tax old versus new, and I've explained with a 16 lakh salary. And read my article on my blog, blog.tareshbhatia.com, and there is, I'll just show you this, and this link I'm given below. Understand the new and the old tax regimes, and understand how you can, an income tax guide I've given you on my blog, explaining all these differences also very clearly. So go to the links below and understand this. So go to this link which I'm given below on my blog, blog.tareshbhatia.com. Read the entire article which I've written here, how to achieve zero income tax on a 15 lakh salary in the year 24-25, and it's a comprehensive guide. So this explains what I've explained as an article. Obviously you have to update yourself with the latest financial year and latest calculations and the annual deductions which your company is doing, standard deductions which you're taking, and the latest rebates which you are taking and aware of. So understand these terms. I have explained these in simple common man's language on my blog here, and I'm also giving the takeaways there. So just take a look at this blog on my. So if you're finding these tips useful and you want more on how to avoid paying taxes, go to this link given below and go to the blog as I've explained. But be sure to like this video, share it with your friends, and subscribe to my YouTube channel Taresh Bhatia. How do you like it? Let's try and summarize how to calculate your taxable income, and the Excel sheet download below will explain you how you can understand what your gross salary is, how to subtract the exemptions like HRA, deductions under ATC, ATD, apply the standard deductions, calculate your net taxable as an estimate, discuss with your CA, and depending on your final figure, you might like to qualify for various rebates options, bringing your tax liability even further down. So all these sections which I've explained, and I've explained the comparison between old and tax regime. So you can take a call, take a decision how you want to pay taxes, or you want to use old tax regime with the deductions in the old regime, which could go a better way. The choice ultimately depends on your financial situation and your goals. And I would say, remember, tax planning is a crucial part of your managing your finances. By making informed decisions, you can actually significantly reduce your tax liability. Do like, share, comment, and subscribe to my YouTube channel Taresh Bhatia for more such valuable insights on how to avoid paying taxes like in this video for 15 lakh rupees. I hope you enjoyed this video. This is Taresh, your financial freedom specialist by qualification, a CFP, certified financial planner, author of the book The Richness Principles, coach at the Richness Academy. Join on my live webinar in the link given below in the description, the Richness Masterclass, where in 90 minutes I'll take you through very different strategies to understand how your money can work better for you. Till then, happy investing. Stay always happy with what you're doing, what your investments are. Pay taxes if it is possible, to not go for any further deductions, rebates, and your tax slabs don't allow any further deductions. Don't find shortcuts. Pay taxes if you have to, because taxes bring you a satisfaction also that I am paying the taxes which are eligible, and I am using the maximum rebates also possible. Discuss with your CA and do pay taxes on time. This video is not for avoiding taxes totally. It's just some strategies for certain people and certain exemptions, rebates, which you can take benefit as a strategy, how to use them, and understand, learn, adopt, and then adapt according to your tax structures, salary structures, CTC, and finally with your CA, the final calculations. Till then, stay happy. This is Taresh, your financial freedom specialist.